progress in addressing global challenges unless the United States and China cooperate.
Possibility of the cooperation, including on a digital technology, payment system under the central bank, and using more local currency.
The third Finance Ministers and Central Bank Governors meeting is taking place here in Gandhinagar. 520 participants from 66 delegations are here at this venue. While there are strong differences between the G7 on one side and Russia and China on the other on the wording of the paragraph related to the Ukraine war, India is hoping for consensus on issues like debt restructuring, multilateral development bank reform, cryptocurrency framework and digital public infrastructure as well. Janet Yellen, the US Treasury Secretary, had a bilateral meeting with Finance Minister Nirmala Sitharaman earlier today. Listen in to what both leaders had to say.
Our discussions highlight the commitment of India and the United States to actively further the G20 agenda, facilitating consensus to intractable issues associated with rising indebtedness of low and middle income countries and harnessing opportunities presented by crypto assets and digital public infrastructure for financial inclusion.
The United States and India are among the closest partners in the world. The United States is home to the largest Indian diaspora outside of Asia, and it serves as India's largest export market. We look forward to working with India on an investment platform to deliver a lower cost of capital and increased private investment to speed India's energy transition.
Sources say China's response has not been encouraging when it comes to the debate over debt restructuring for emerging and developing economies. US has conveyed to China that both countries should not let their differences impact the working of the G20. Here in Gandhinagar, the focus is also on how to strengthen multilateral development banks and institutions for the future. We caught up exclusively with Kristalina Georgieva, the IMF chief, and also World Bank's new president, Ajay Banga. Listen in.
Well, I've just taken over 6 weeks ago, and I'm very clear that the first thing to do is to redefine the vision and the mission of the bank, and to make it very clear that what we're trying to do is to eradicate poverty, but on a livable planet. And what I mean by livable planet is to bring in the aspects of dealing with climate change and pandemics and fragility as well. The second thing we're working on is the capital adequacy framework and specific ideas of that. And the final item is on the operating model and collaborating with other multilateral banks and creating the scalability and the replicability of what we need to.
So you spoke about spurring private sector investment here, especially in infrastructure. Even in India, private sector investment, why it's not taking off is a cause for concern. What would be your recommendation?
Well, I think, this is very easy to talk about how the private sector will come and fund everything. The reality is right now, with what's happening with interest rates and with the IRA Act in America and with what's going on in Europe, private sector money is literally flowing into the developed world even more than it is into the emerging markets. And so there's a lot of work to be done to make it attractive for them to come here. And that's one of the reasons why we've created this private sector investment lab, which is going to be co-chaired by Mark Carney and Shriti Vadera, with 15 CEOs from asset management companies and operators. And the objective is to go through what holds back, what's the barrier that holds back this growth of the private sector that we want to invest in. Right. It could be risk-taking, it could be foreign exchange risks, it could be other kinds of risks.
The world economy requires coordination, so policy actions taken in different countries align, and this is what we are achieving here. Great leadership from the Indian presidency of the G20, a very constructive tone at the meetings, and what it would result in is better policy coordination and more efforts to overcome the fragmentation that could affect developing and emerging market economies more than the advanced world. So excellent to be here.
Ms. Georgieva, when it comes to reform of multilateral development banks, what is your one key objective?
To significantly increase the power of financing with the multilateral banks working as a system and deploying to the fullest their capabilities.
And my final question on cryptocurrency, on debt restructuring, do you think we need more support from countries like China?
Of course we do. We need all the creditors to work together in a coordinated manner. China today is a significant part of the creditors' landscape, and with more wealth comes more responsibility.
Increased climate financing is a big issue here at the G20 meeting in Gandhinagar. Countries want China and Saudi Arabia to come on board for positive discussions. The European Union has shown a lot of interest in investing in India's green hydrogen sector. We caught up with the European Investment Bank's Vice President, Chris Peters, who told us that the EIB could soon invest 500 million euros in India's renewable energy sector.
First of all, I must emphasize that we are a member of the Hydrogen Alliance here in India, a very important alliance where the government and the private sector is working together to make the ambition of your Prime Minister a reality, and to make these hubs, hydrogen hubs, also a reality. Now, we are very close to discuss all these plans. Secondly, we have now some very important negotiations for the first phase of this 1 billion euro investments, and this first phase is not specifically oriented to hydrogen, but more onshore windmills and also solar panels. So that is also a very important element. You have not only the hydrogen, but also the solar panels. Also there, the ambition of your Prime Minister is amazing, and also there we want to be partner. Dus talking about hydrogen and the private sector, the alliance is a very important actor to work also with us, and also there are companies coming from Europe that also will invest here in your country.
When you speak about this 500 million euro investment which is going to be made in the near term, is this a government-to-government investment that we're talking about, or will this be in a particular company?
First of all, this is to the government, and of course it's to the government to create the projects, because we are a project-driven bank. We are financing projects, but it is of course to the government to see which private companies from Indian are working with the government and with us, and we can finance that. So it is a very good cooperation, once again, between the government of India, between the private sector and us, the European Investment Bank. And it is not we that make the projects, it is the government and the private sector that says, okay, we have this project, and that can be a project in this 1 billion financing that we provide, and that is working very, very well.
When it comes to your global outlay, investment funds, what is the quantum of outlay that has been earmarked for India?
Now, last year the bank have done $72.5 billion as a bank, financing projects all over the world, in Europe and also outside of Europe. Now, when you look to outside of Europe, we have installed what we call the EIB Global. That is a branch in the bank that is specifically oriented to finance projects outside of Europe. And there we have last year more or less financed $10 billion or euros. And once again, we are very active in Africa, for example, but more and more we are oriented to India, to see what we can do. We do that on our own risks, because in some areas like Africa we are working with the European Commission. For the moment that is not the case. We are taking the risk on our own to say we are investing in India, because we believe in India. We believe that we can make a difference as a European Investment Bank, but certainly that the projects that coming from the government and the private sector in India are very good projects, and that we can finance in that kind of projects, because we are a climate bank and we are convinced that India is going on the right way.
Can you give me a percentage of your total investments coming to India?
I've said that in total we have done 4 billion euros until now, 3 billion euros in infrastructure. I hope that this percentage, because this percentage is not the most important element. The most important for me is the quality of the projects and the future. And the future to invest in India is increasing. We are believing in India and we are investing in India. We are now in the room, if I may say so, and we hope to stay in the room and to have a lot of projects that we can invest. And in a total of 10 billion euros each year, it will be increasing for the next years. And once again, I hope a lot of money went or shall go to India.
So can I say that investments that earlier would have gone to China are now coming to India from EIB?
Once again, we are a project-driven bank. When you have projects, we go there. I hope that you have a lot of projects, and there is a lot of money available on the world capital market. And the question is, where is that money go? And when it goes to India, because you have good projects, climate, green projects, and so on, then a lot is possible.
On that note, we take a short break, but don't go anywhere. Our special coverage of G20 meetings here in Gandhinagar continues when we return. Welcome back. You are watching CNBC-TV18 special coverage of the third G20 finance ministers and central bank governors meeting here in Gandhinagar. For central banks around the world, there is a big concern on how to regulate the cryptocurrency sector. The G20 has asked the IMF and the Financial Stability Board to come up with a synthesis paper on what can be done on crypto assets going forward, whether a roadmap can be agreed upon or not. we caught up with Bank for International Settlements Head of Research, Hyun Song Shin, on the risks related to the cryptocurrency sector, stable coins, and the importance of central bank digital currencies. The Financial Stability Board, the BIS, and the IMF together have come up with a synthesis paper on cryptocurrencies and stablecoins and crypto exchanges as well. Lay out the challenges for us, especially when it comes to cryptocurrencies, because your recent report to the G20 has said that crypto's inherent structural flaws make them unsuitable to play a significant role in the global economy. What are some of the challenges that you've highlighted before the G20?
Thank you, Parikshit. Thanks for the invitation. Well, there are two main types of risks with crypto. One is the conventional financial stability risk, but there's also a broader set of issues to do with a macro financial risk, to do with monetary sovereignty, and also monetary policy transmission, as well as capital flows and so on. So the BIS report is part of a number of reports that have come to the G20, and our focus has been very much on the longer-term structural issues to do with crypto, whether those structural features make them suitable as money, as the basis for a monetary system, and how those structural features feed into these risks that we've outlined. Now, one of the findings that we have is that although crypto operates under the banner of decentralization, they in fact turn out to be highly centralized. For example, think about FTX that collapsed last November. It was a very centralized exchange. It was also engaging in lots of intermediation activities in an ecosystem that has many centralized parties, like crypto hedge funds, that have leverage as well as maturity mismatch. And we can get to the other structural issues later. But for these reasons, we think crypto is not really suitable as the basis for a monetary system.
Right. When it comes to cryptos, would you be, in a way, pushing for a ban on cryptocurrencies altogether?
I think a ban is certainly one of the options. Especially when it comes to specific activities. But I think we take a more comprehensive approach. There are three types of approaches here. One is the ban that you mentioned, but I think a more important element here is the element of containment, in the sense that you build firewalls between the crypto ecosystem and the conventional monetary system, so that you can insulate the conventional system and avoid the intertwining between crypto and the conventional system. But I think a very, very important element, of course, is regulation. So how do you bring to bear the rules that we already have for the conventional financial system and apply them in a consistent manner, in an effective manner, for the crypto ecosystem itself? So there are three prongs to this.
Are we expecting any sort of consensus on the G20 roadmap on regulating the cryptocurrency sector, the framework for regulations? Are you expecting some consensus, or do you feel that there are diversions, very strong diversions among countries?
I wouldn't say there are very strong divergence among countries. What I would say is the FSB standards on regulation is going to be a very key part of the overall discussions. But as we discussed before, there are broader issues than simply the financial stability aspects. There are issues to do with monetary sovereignty. There are issues to do with monetary policy transmission. And these are risks that affect, in particular, emerging and developing economies. I think there is a broad recognition that taking a broader perspective is important. And the way, from the discussions that we've had so far, I think we will converge, and I think it's converging to a place where it is not only taking account of the financial stability aspects, but also the broader, macro financial, issues as well.
Right. So, will there be a framework that will be agreed upon by the end of it, or you feel that there will be certain priorities that the G20 will agree on?
There is a paper that is being delivered to the Leaders Summit that is going to be authored, that is going to be jointly authored by the IMF as well as the FSB. So it's going to be a very comprehensive document that takes account of both of these aspects. Now, to a large degree, To a large degree, the policy towards crypto is going to be, will be led by each jurisdiction. For the reason that we discussed before, the priority should be to insulate the monetary system, to make sure that you preserve monetary sovereignty, to make sure that the monetary system works for the public interest. There are also going to be additional concerns that have to do with the openness of some economies and the issues to do with money laundering, the anonymity of crypto, as well as the standards for, standards against, money laundering and other illicit activities. And I think those will be a set of standards that will be work in progress. But what this meeting will do certainly is to give that discussion a huge boost.
Right. How do you look at recent bank failures in the United States and Europe? Could there be further pressures in the banking systems? Are you monitoring certain jurisdictions for issues like that?
Well, Parikshit, we are now emerging from a very long period of low-for-long monetary policy. And during that period, various vulnerabilities had built up. One of those was the lengthening of the maturity of debt, interest rate risk and duration risk. And the banking sector issues that we have seen so far this year can be seen as one aspect of that, because some of the assets, some of the securities that some of the banks were holding were much longer term than the funding, and there were some, accounting issues which didn't mark these assets to market. Now, as we normalize monetary policy, and it's going to be a long and there will be bumps along the way. What we saw in March was that some of those vulnerabilities did materialize into the failure of a couple of banks. Since then, though, we have seen a moderation of those kind of risks, and we see that in market conditions as well. But of course, that doesn't mean that the risks have not gone away. That doesn't mean that the risks have gone away. The other important point to make is that we should not be focusing, if you like, sector by sector. We should take a broader view, because the same types of interest rate risk and duration risk, of course, are out there in the financial system more broadly. So whether it be the banking sector or the non-banking financial intermediary sector, the same kinds of risks will be latent there. So we have to be very watchful and not get too focused on a particular sector, because otherwise we'll be missing the bigger picture for the details.
Right. And finally, your annual economic report said that gains made so far in the fight against inflation owe much to supply chain easing and commodity prices falling. Which are some of the challenges and risks to the global economy that you see for this year and next year that you're highlighting to all the banks?
Indeed. And as we say in the report, we have seen some gains in the fight against inflation. A lot of that has been coming through in headline inflation, because the supply chain bottlenecks have eased quite considerably since the height of the pandemic. And we've also seen a decline in commodity prices, in food and energy in particular. But we're still seeing core inflation remain quite stubbornly high. And that's going to be the challenge going forward for central banks in their monetary policy. They have to stay the course to make sure that we can address core inflation, because that is something that is much stickier and is going to hang around for much longer. Now, as we do that, we have to think about the broader set of policy tools out there. Fiscal policy is really a very, very important part of the overall package, because monetary policy and fiscal policy, although they seem to operate on the surface according to different imperatives, actually they are very closely joined up, not least because fiscal policy will have an effect on the real economy, and there are balance sheet interlinkages of the central bank between fiscal and monetary policy. And so as we go forward, fiscal policy and monetary policy, they have to be much better coordinated in order to tackle these risks. And not least, we have to take account of financial supervision, financial regulation, so that we can deal with emerging risks as they materialize.
That's all we have time for on this special broadcast. From video journalist Harun Chippa and me, thank you for watching. Goodbye.
Sentiment across India's manufacturing